In this video, we'll be going over IRS Form 15,400, Clean Vehicle Seller Report. So this is an informational report that you should receive as a taxpayer from a car dealer or a seller when you go to claim a clean vehicle credit. So in 2022, Congress made a change to the tax credit laws involving alternative use vehicles, clean vehicles, things like electric, hybrids, stuff like that. So we do have a separate article on the form that you would file as a taxpayer to claim that credit. I believe that's IRS Form 8936. So they did a lot to streamline the tax credits so they're a little bit easier to understand. They also made it a little bit easier for the automotive industry to report whether or not a vehicle qualifies. So under the prior rules, manufacturers had to issue a report. They had to certify. There was a quota based on the type of manufacturer. So a lot of Tesla owners were not able to qualify for a clean vehicle credit or a electric vehicle credit under the old rules. So what the Inflation Reduction Act did was they placed the onus on car dealers to produce a clean seller report. So that's the IRS Form 15,400. And in this video, we're going to go over step by step what you should be looking for when you receive this from your car dealer. So this isn't an instruction for car dealers to complete this. This is an instruction for taxpayers to be on the lookout for information that you need to have in your report so that you can claim the tax credit on your tax return. So we do break down a lot of details in our article, which we'll put a link to the articles in our show notes on this form as well as other forms that are mentioned. So IRS Form 8936, we'll put links to resources in our show notes. The article contains a little bit more information on how the tax credits are calculated, how the vehicle has to qualify for a tax credit, and then the income requirements for taxpayers to qualify. So we'll lightly discuss that, but most of the detail is in our article. So this is a 5-page document, but realistically, the Clean Vehicle Report is 1 page. The next 2 pages are basically step-by-step instructions for the car dealer based on either the new clean vehicle instructions, which is under Internal Revenue Code section 30D, or for the previously owned clean vehicle instructions, which is under Internal Revenue Code 25E. So for each vehicle that you purchase, you can only claim one tax credit or the other, and the maximum amount is, I think, $7,500. We'll kind of go step by step. So let's see. At the top of the form, there is some information. Basically, the main takeaways are the report certifies certain information about the vehicle. It does not guarantee that a buyer of that vehicle is eligible for a tax credit, because a car dealer has no idea what your adjusted gross income is, but you do have to meet certain modified adjusted gross income. You have to be below a certain threshold in order to qualify as the taxpayer to claim this credit. So take a look at the requirements for IRS Form 8936 to make sure that you qualify before you commit to making this decision solely based on being able to claim the credit. So for a new vehicle, you won't receive a clean vehicle report if the manufacturer's suggested retail price exceeds the limitation in the Internal Revenue Code for new vehicles, new clean vehicles. So in this form, it states that vans, SUVs, and pickup trucks have a limit of $80,000 or less. And then all other vehicles have a limitation of 55,000. So if your vehicle exceeds these limits, then it's not eligible for the tax credit. And you won't receive a clean vehicle seller report. The final assembly of the vehicle needs to be in North America, not necessarily the United States, but it has to be in North America. If the vehicle was previously owned and you're not claiming the previously owned credit under Code Section 25E, then you're not going to qualify for the new credit. So you should take a look at the requirements for the 25E to see if you might qualify for that. And then if the buyer, you as the taxpayer, are not willing to provide your taxpayer ID number, most of the time that will be your social security number, then the dealer will not give you this report. So you don't have to give your taxpayer ID number to a car dealer if you feel like this is too much information. But if you do not do that, by law, your car dealer is not allowed to issue this clean vehicle seller report. So for the previously owned credit, basically the sales price has to be less than $25,000. It has to be at least 2 years. The used model has to be at least 2 years old. So if 2024 models are out on the street, then you have to be buying a 2022 or earlier model. And again, you won't receive this form if you're not willing to provide your taxpayer ID. So let's go through the rest of this form, and then we'll lightly discuss how the tax credits are calculated, and then we'll wrap up the video. In this case, John Doe purchased a vehicle. It's a new vehicle. He bought it from James Smith. And your job as the taxpayer is to just review this to make sure that everything matches either what your records or it makes sense, right? So, the dealer is going to put their employer ID number, their license number, and their jurisdiction. This is all information I just put in there. John Doe is going to review to make sure his name and his social security number are correct so that matches up in his IRS records. So the car dealer has to send a copy of this to the IRS, and your taxpayer ID number is going to be what links this to your tax return. So box 3 or line 3 or line 4, only one of these will be marked. So line 3 is used for new vehicles. Line 4 is for for previously owned vehicles. So for new vehicles, you should see the yes box checked here, basically stating that the original use of the vehicle started with you. In other words, you're the first owner, you're the original owner. So you are entitled to this credit because you're the original owner. Again, this doesn't guarantee that you're still eligible for the tax credit, but this is a qualifier. So if you're not the original owner and they have to select no, they won't issue you this form because the vehicle is not eligible for the credit. On the other hand, if you're looking at a previously owned vehicle, then they have to certify that this is the first transfer to a buyer other than the original buyer. So meaning you're the second buyer. If that's the case, then you would see yes. If no, then that would stop the form right here. There is some verbiage about leases. If you're what you need to know as a taxpayer is that these certifications, the car dealer is responsible for making sure that they account for leased vehicles when they're making these certifications. They should be able to tell you that they're going to put the information that you want to see in the clean vehicle seller report. If they can't do that, then that's the vehicle you probably should not be buying. So, again, you can use this as a checklist for things to look out for when you're buying a vehicle. So hopefully you've already accounted for these. But what you need to know is if you're leasing a vehicle, you won't receive this report. A leasing person or a lessee is not considered the owner of a vehicle, so they don't qualify for this credit. Box 5, we're going to verify the vehicle identification number, or VIN. This should match your registration or the VIN that's physically etched into your vehicle. The battery capacity generally is stated depending on when you put the vehicle into service. It may be a factor in calculating your tax credit, but for model years 2000 or for calendar years 2024 and later, it really is not a factor. So the date of sale in box 7, which should line up with the date placed in service, assuming that you drove the car off the lot. In this case, that was June 1st, 2023. We got a model year 2024, and then a total sales price of $40,000. And remember, for a regular car, if this was more than $50,000, then we wouldn't be figuring out this tax credit. So under the rule, the maximum credit allowable to the taxpayer in this case is $7,500. Again, this is the dealer's responsibility to be able to state what the maximum available credit is based on the specifications from the manufacturer or from the dealer. And then at the bottom, they're going to certify this under penalties of perjury. So the car dealership is actually responsible under federal law to making sure that this information is correct. But if they make a mistake or they say something incorrect and your tax credit is disallowed, that's on you. So that's why you should be sure that all of this matches your records and that your income, meets the criteria. And then at the very bottom, you'll see the name of the person that is authorized by the car dealer to make that certification. They'll sign it and date it. You should just make sure that everything makes sense. So let's briefly discuss how the tax credits are calculated and the income requirements, even though we do cover that in IRS Form 8936. So for new vehicles, there is a weird calculation with a ceiling of up to $7,500. The calculation is basically as long as a vehicle had at least 7 kilowatt hours of battery capacity. In this example, ours had 10. So it's eligible for a maximum credit of $3,751. And then for every kilowatt hour above 7, it's eligible for an additional $417. So for vehicles that were put into service from the beginning of 2023 up through April 17th, 2023, the car dealer had to make that calculation and actually put it on your form. After April 18th, 2023, it's a little bit simpler. You don't really need to understand the math. It's basically a two-part tax credit. So one is that the vehicle has to meet certain critical minerals requirements, meaning that some of the critical minerals like cobalt or lithium have to be mined and sourced, I believe, within North America. And then the other part is the battery components. A certain percentage has to be sourced from North America as well. And as we go through between now and 2022 or 2032, the minimum requirement escalates each year. That's not important for us to know as taxpayers. It's important for us to understand whether or not a vehicle meets those requirements when we're buying it. So the question that I would suggest that you ask is making sure that your new vehicle meets both the critical minerals requirement and the battery components requirement, and the car dealer is supposed to say, yes, it does. So if it meets one requirement, then you're eligible for a tax credit of $3,750. If you meet both requirements, you qualify for the full $7,500. If you don't meet either requirement, then you're not getting this tax credit. So for previously owned vehicles, the calculation is a little bit more straightforward. You're going to take the lesser of either 30% of the sales price. Basically, for a $20,000 car, let's say that would be $6,000, but you can only take up to $4,000 of a tax credit. So the lesser of those two. If you buy a $20,000 car and you do the math, you would be eligible otherwise for a credit of up to $6,000, except for the fact that the tax law limits puts a ceiling of $4,000. So the highest tax credit you should see for a used car is $4,000. I am going to go back. If it's not in these instructions, there is an adjusted gross income requirement that taxpayers must meet. So I am going to transition to the IRS website where it actually shows this. So a modified adjusted gross income cannot exceed $300,000 for married couples filing jointly or a surviving spouse, $225,000 for heads of household, or $150,000 for single or married couples filing separately. So we do cover that in a little bit more detail. I just wanted to kind of advertise that as part of this video. You can find more information in the IRS Form 8936 instructions. So I think that wraps up what we have for this form. Again, you can read more detail about the requirements and what you should be looking for in our article. And we'll also include links to other articles that might be pertinent to you. So if you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And if you have any questions or comments, or if there's another topic that you'd like to see in an upcoming video, please hit me up in the comments section. Thank you very much and have a great day.